China stocks are rebounding after a tough couple of years. Beijing's zero-COVID policy slammed the economy, and regulatory crackdowns on technology firms like Alibaba and Tencent were a major headwind. In fact, since 2020, Alibaba founder Jack Ma had pretty much disappeared and had rarely been seen in public over the last 3 years. On top of that, US tensions are a concern. For example, in recent months, the White House has barred shipments of key chip technology to China, adding to tariffs and other curbs on Chinese goods. Nevertheless, China is still the world's second largest economy and home to dozens of companies that trade in the US. Right now, a bunch of Chinese electrical vehicle stocks like Li Auto, XPeng, NIO, BYD have been soaring. BYD, which recently became China's largest electrical vehicle maker, stock is up almost 40% this year to date. Li Auto is up almost 104% this year to date. Pinduoduo and Vipshop Holdings are two online Chinese retailers that have both seen strong rises in revenue and earnings in recent quarters, and both stocks have been showing signs of strength. Alibaba shares have made a big comeback in recent weeks as well. The stock had been hit hard in 2020 and targeted by regulators. But that hasn't scared Ryan Cohen and Michael Burry, who both own a combined hundreds and millions of dollars worth of it. In early 2023, the US government was considering broad prohibitions for US investments into Chinese tech. But if you look at the institutional holders for all of these Chinese companies, it's the usual suspects. There's BlackRock, Vanguard, Morgan Stanley, State Street, Goldman Sachs, and other American companies. And it looks like institutional holders are increasing. After all, it is a free country. Do you think it's safe to invest in Chinese stocks?